Good morning, everyone. Today is Wednesday, November 20th. What I'm doing right now is adding the day trade to win indicators to the chart. I want to see if there's any opportunities. I'm going to add the ATO2 and I'm going to add the Atlas line. This is being recorded live. It's not market replay. Here we have immediately a short signal to go short. It's an Atlas line trade, and it looks like I may even be able to get a better price. So I'm going to place a short entry at 31.14 quarter or better. You always want to try for a better price. In this case, I'm getting a better
Order
price,
filled.
and I'm short 31.14 quarter. I got a better price, 31.15, which is great. So those of you who have the Atlas line, it's 31.14 quarter. Please don't chase this market. You should be getting this price or better.
Order
And
submitted.
my target is based off of the ATR, 2.5 points or 10 ticks, because that is what I believe the market could do in the next X number of candles. I'm going to cover the stops and the targets in this video so everyone understands a little bit of the management, the trade management that goes into this. Before I go any further, I do want to do the due diligence of letting everyone know that trading is risky. Please do not trade with funds you cannot afford to lose. Talk to your broker. Understand that there's risks involved with trading. It doesn't matter what software you're using. You can always lose money when trading the markets. So please be very careful. Use stops and educate yourself. Learn how to trade before jumping in because it looks good or you have a hunch. Now in this video, I'm going to explain stops, trade management, how to protect yourself. What are the rules really when it comes down to trading the way that I trade, price action? I am speeding up this video so we don't have to stand and wait around for 20 minutes for something to happen. So let's talk a little bit about a time-based stop. A time-based stop is limiting your risk, your exposure. 20 minutes is the maximum amount of time that you should be in a trade like this. Yes, you can go for 25 minutes if you really want to, or if you're trailing a stop, but we really want to limit the amount of time that we are in a trade hoping that it's going to go in our favor. If it doesn't work immediately, 20 minutes, you should cap it off. The next we have proof. A prove it stop is a way to say there is evidence and proof that this market is going against me, and therefore I really shouldn't be in this trade any longer. I have a target, which is an MIT. We talked about that, which is 2.5 points, 2.25 points. This is a great way to get out of the trade based on the current conditions. Review the videos if you haven't done so already. I have a lot of free education out there. And we have something that's called a catastrophic stop. A catastrophic stop is when the market goes against you, the maximum amount of money that you're ever willing to lose. You should have a catastrophic stop. Typically, I cap it off at 5 points, 2 times the ATR, maximum of 5 points. And that's all relative, right? So this is the first trade of the day on the Atlas line. Time-based stop, prove it stop, proof that you should no longer be in the trade, and a catastrophic stop, which is a maximum amount of risk that you should have when trading. So those are the 3 essential stops that you should be focusing on. Now the Atlas line also has pullback and strength trades, and then we have pivotal stops, which protects you if the market breaks the pivot. So all those things are taught in the training that you get with the Atlas line, but we're just going to focus on the primary time, proof, and catastrophic stop. So this is the first trade of the Atlas line. Now I'm going to switch gears here because I see another trade setting up. This is a long trade, and I wish I would have known that the market went lower for a few more points, as you can see, but I didn't know that. And so we have to stick to the rules. I'm just taking the target 1 times the ATR. Now there's a reason why I'm looking at this as a potential long. The rules of the Atlas line are very simple. I'm going to share them with you. When I have 2 consecutive candles closing prices, using a 5-minute chart, above or below the Atlas line, it fires off a signal. It's based off of price action. It's not a mystery. I like to use proof of the candlesticks when I trade, closing prices. So when this candle closes, there's going to be an order to go long. Now, I don't know if the market in this candle will stay where it is, but if it does, it's going to initiate a long order. So I'm preparing myself to go long. I'm already looking at the ATR for 2.25 points, 2.5, 2.25, even 2 points to be a little bit more conservative.
Order
So
filled.
I know what to expect before I even enter into the trade. I know the conditions, about 2.25 points of target. That also will be calculated in my stop. I know my entry. Whenever this candle closes, I'm in. I know that my catastrophic stop will be
Order
less than
submitted.
5 points, never more than 2 times the ATR, maximum of 5 points. So I'm already preparing myself before the trade even fires off to know what I'm going to do. And this is what you should be
Order
doing as
submitted.
well. When you place a trade, it shouldn't be just jumping in and jumping out. Have a plan. Understand why you're doing what you're doing. And this is what you should, as a trader, be focused on. How do I manage the trade? Why am I entering? What do I do if things go wrong or if it goes terribly wrong? How do I protect myself? Now, the prove it stop is any candle that closes on the opposite side of the Atlas line, on the other side. So in this case, it didn't close on the other side. I have a time-based stop of 20 minutes, so I'm speeding up this video so we don't have to wait 20 minutes to see what happens, the result. And we have a catastrophic stop. I mentioned never more than 2 times the ATR. It's relative, so the larger the volatility and the conditions, the larger the stop, the slower, the smaller the stop. Okay. Now I'm using a limit order to get out of this trade, so there's absolutely no slippage. It could actually give me a better price, but it's rare. So I have just taken 2 trades based off the Atlas line. That doorbell sound you just heard is the audio alert for the strength trades that just appeared. And so if you do want to take the strength trade, remember the rules are different. The training for the Atlas line covers how to manage the strength trades, the pullback trades, the bounce trades, and so on and so on. There's also an Atlas line long trade. I'm sorry, an ATO trade, an at the open trade. I just noticed here to go long right about the same time this Atlas line was going long. There's no need to double up. I always say that you're either long, which is good when two things are in your favor. If you have any questions, if you want to join the next mentorship class, December, visit DayTradeToWin.com. Email us, call us. I'll see you in the next video. Take care now. Bye-bye.